Hey guys, welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, this is going to be pretty much how to swing trade for 2024. This is going to be a full beginner's guide on how to go about swing trading, pretty much my tips and tricks and strategies for it. So I hope you guys all enjoy it. If you have any questions, feel free to ask down in the comments. And if you want to learn more about swing trading and my style, my strategies, my approach, I highly recommend going on and checking out my swing trading masterclass. It's a school I have. It's absolutely fantastic. We have private live streams, we have quizzes, we have lectures, we have a group chat, everything you guys need for swing trading. And we're doing the 4th of July sale. You guys can use code AMERICA for 50% off. So check it out down below. It's only valid for this week just because it's the 4th of July. So check it out down below, guys. Let's jump into this here. So what is swing trading? So in simple terms, swing trading is when you buy a stock, you hold it for more than 1 day, but less than 1 year. On average, I'll hold my swing trades for 6 to 9 days. But of course, there's going to be times where I buy it today and sell it tomorrow, and then buy it today and sell it 9 months down the road. You know, it all depends on pretty much the stock, my approach, and pretty much my mindset going into the trade. So now that we understand that, how do you go about swing trading? Do you just buy random companies? How do you buy companies? Don't worry, guys, I got you. And don't forget, at the end of the video, we're going to be breaking down a strategy that I highly recommend for new traders to start growing your account. So stay tuned for that. But let's jump into this here. So how do you go about buying stock? So it's actually very, very simple. All you need is a stockbroker. So a stockbroker is how us as traders and investors have access to the stock market, which is just a marketplace for stocks. Now, the best brokers I would recommend for trading is going to be 1 Moomoo, 2 Robinhood, and 3 TD Ameritrade. The reason why I put Robinhood in the number 2 spot is because of how easy it is. Yes, Robinhood is probably the most basic broker out there, but it's number 2, right? You can get the job done with it. It's not going to have a lot of the trading features like Moomoo has. Moomoo is the broker that I've been using for actually over 6 years. It's absolutely fantastic. It has great charting. It has great scanning. But more importantly, I think it offers something called paper trading. So paper trading is just how you can start practicing and working on your style and your strategy for your trades. Now, what that does is it helps you, a new trader, build up confidence and work on a strategy. Each person has a different approach with the stock market, and so practicing your style and your strategy will really, really make you a better trader. And after you paper trade, in my opinion, for 6 months to a year, it does take a while, and the reason why is because you want to practice in all market conditions. You want to practice when the stock market's going up, when the stock market's going down, when it's consolidating, so you can be just a solid trader with your own money. After you guys paper trade, then it's important to fund an account with a small amount of money and just do the 1 share challenge, where pretty much you're just investing and trading, 1 share, so you can build up the emotion side. Trading is mostly emotion based. What that means is when you buy a stock, you're going to have your emotions very, very high. And what that means is, you could be thinking the stock's going to go to the moon. You could have fear. You could have FOMO. During the whole GameStop era, there was so much FOMO in the market. People had a fear of missing out. So it caused the stock to go up higher and higher and higher and higher. Now, the great thing about Moomoo, and I'll put all the brokers down below so you guys can sign up, but the great thing about Moomoo and a lot of the brokers nowadays is they have stock scanners. Stock scanners is pretty much just the way you guys buy stocks. You don't buy just random companies. You buy stocks that meet your strategy. So some of you, might like stocks that are super, super overvalued and you're going to short them. Some of you might find stocks that are on indicators and moving average lines and undervalued on the RSI, and I know that stuff sounds confusing, but don't worry, I got you guys, so stay tuned for that. All right, so now that we kind of understand some Very, very important things when it comes to trading. Now let's talk about how to actually go about it. So this is actually a stock here we were actually looking at to buy. And this is ticker symbol FLEX. And the broker I'm using is Moomoo. So if you want to sign up for them, I'll put a link to them down below. They're absolutely fantastic. So, looking at this stock here, what do you guys notice? The first thing I noticed is it has this good upward trend. So pretty much the stock goes into the upper right hand corner of the screen, going from the lower left hand corner, establishing that good trend. Now, another thing you guys might notice is this blue line and this red line. These are what we call moving average lines. So when the stock is above them, like it is up here, they're going to act as support. So support is just where we get good tendencies of getting buying pressure. And let's actually zoom in and look at some touch points. So you guys can see it hit it here. We had good buying pressure. Hit it here. We got good buying pressure. Here we had that good move, good move, good move. Good move, good move. You guys can see it hits it and gets good buying pressure. Now, when the stock is below it, you will notice that it actually hits it and we actually get sell off here. So it hits it, sell off, hits it, sell off, hits it, sell off. So moving average lines, they act as support when the stock is above it and resistance when the stock is below them. So if you're a long trader, so you're buying and try to selling it at a higher price, you want to buy it as close as you can to these moving average lines. Now, there's a difference between the blue and the red. So the blue one is what we call the 90-day moving average line, and the red is the 200-day. So what this does is it takes the previous 90 or 200 days, depending, on the moving average line, it merges them together to form this line. It takes the closing prices, excuse me. So now these lines act as trend indicators. So you can look at the trend. They act as support and resistance. So now, as a trader, you're understanding, okay, I want to find a stock with an upward trend. I want to find it on the RSI, or find it, on the moving average line. Speaking of the RSI, that's the next one. So the RSI is this blue squiggly line down here. And I know it does seem confusing, but it's actually a very, very important and easy indicator you guys can use. So what I always do here is I will go to these drawing tools up here and I'll click horizontal line. Now what I do is I draw the high points and I'll draw the point that it's at right now. So right now, it's trading for a 37 on the RSI. So what I will do is I will look back, okay, what did it do the last time it was trading for a 37? So let's go back, and that is right in here where the stock went from, let's draw it out, where the stock went from near and around this $26 mark all the way up to about $34. So you guys can see that great move. So now, as a trader, you're looking for a stock that's undervalued on the RSI, that is on a support line, and now you can start determining what stocks you want to buy. You don't want to just buy any old random, companies here. The next thing that I always do here, and that I do think is very, very important, and yes, there is other indicators like the MACD and a whole bunch of other ones. But honestly, for me, keep it MISS. MISS. Make it simple, stupid. Don't overcomplicate your trades. Keep it as easy as you can, where you can understand the stock and go from there. Personally, I will use the MACD as well, but maybe we'll save that for a later video here. So the next thing is determining your risk management. So risk management isn't making you money. It's actually going to be preserving your money, and so that's what a lot of people don't realize here. So the great thing about using Moomoo here is they offer this tool that pretty much explains your risk and reward. So you guys can see if we set our target up here at old resistance where it hit it, we got that sell off here, and we set our stop loss. The stop loss is just the max amount of money you're willing to lose on this trade, because no matter how good of a trader you are, you're gonna lose money. So having a good stop loss in place is gonna save you a decent amount of money. So If we just set our stop loss, just below this 90-day moving average line, our risk and reward would be about 3.09. So what this means is for every $1 we trade with, we're hoping to make $3.09 here. So this is a relatively decent risk and reward. So the next thing that I do, okay, if we have good risk and reward, we're undervalued on the RSI, we have, the support of a moving average line, the next thing I'll do is look at other time frames. I'll look at other time frames like the weekly and see what we got going on. Maybe possibly try to draw a trend of some sort where we draw out like that, so we can see, okay, are we going to get more sell off? What's the RSI on the weekly chart? So it's at a 55, so we could get a little more sell off here. But in general, the next thing I'll do is I'll go to the hourly chart, seeing how it looks. So you guys can see, speaking of those moving average lines, when the stock fell below it, you guys can see it actually used it as resistance. Boom, boom, boom. So now it looks like it possibly found some support. Let's draw it out. Whoops, not that one, but here. Possibly found some support where it hit it and we got good buying pressure. So now you could try to hop in at 29 and set your stop loss just below, 28.80 with a really good risk and reward. So this is how you swing trade. This is how you evaluate a stock. And let me show you a stock here that we actually recently took a trade on. And this is ticker symbol BGC. As we look at it here, you guys can see we had this great upward trend. It had this trend line where it hit it of a minimum of 3 touches, 1, 2, 3, and recently 4. So we took a nice trade near and around this, 780 mark, and as of right now the stock's at about 836. So this is a very, very easy example using these moving average lines. It was undervalued on the RSI, and looking at the MACD, we had the breakthrough of the signal in the MAC, which represents good entry. So we had a lot of things going in our favor. So this is a very simple strategy that you guys can do to make money from trading. Now, guys, I know I threw a lot at you, but the biggest thing is to start learning. Start that process of learning, start that education, check out my course. It's absolutely fantastic. Have very, very realistic expectations, but more importantly here, document your trades. As a paper trader and you're starting to trade, look at every trade as a lesson. Look at your profit as a lesson. Look at your loss as a lesson. Look at everything that went right, but more importantly, what went wrong, so you don't have to do that for future trades. Having a journal, or not even just this one, this is the one that I made just because I trade every day. Have a 99-cent notebook so you can document your trades, document your journey, so you can never make a mistake twice. So guys, I hope you guys all enjoyed it. If you have any questions, feel free to ask down below, but I hope you guys all enjoyed it. Like, subscribe, and don't forget to check out my school, check out the notebook, and guys, we'll see you guys in the next one. Like, subscribe, and I hope you guys have a fantastic rest of your day, and take care.